Hello trading friends and welcome back to Forex Focus, brought to you by IG. US employment data much stronger than expected. US interest rates flying higher. Traders flocking to US dollar after the move in US employment data and US interest rates. And of course, this is enough to finally shake gold from its highs. Not so fast. Gold also moving higher. When all is said and done, gold might actually be the big winner of this higher than expected US employment, as that market just continues to tear higher. It's not just move higher, my friends, it is tearing higher. We'll get to all of that in just a second, but let's start with the employment data itself. Non-farm payrolls, 303,000 versus an expected 200,000, the highest that we've seen in the last 10 months. Now, this comes with a caveat that the last few non-farm payrolls have come with, which is after revisions. They've revised down each of the last couple of non-farm payroll numbers. Now, that being said, look at where they've been revised down to, 250 to 275,000, still net beats versus expectation and strong numbers historically. But they have been revised down, and that might be some of the reasoning why we saw some markets move far in one direction and then reverse a little bit. We'll get to that in just a second. But for the time being, very strong number in March, over 100,000 stronger than what was expected. And like I say, the strongest since May it is of last year, in the last 10 months. Now let's dive into the unemployment rate, which we don't usually dive into because it's, as you can see, pretty boring. Been stuck around 3.7, 3.8, 3.9%. But this one was actually really interesting because the expectation was 3.9%, which it was last month, and which was a little bit higher than recent. And this was a print that I think, though it was worse than expected last month at 3.9%, everybody kind of saw coming, right? I mean, interest rates have been high for so long. Inflation is finally starting to move lower. And the expectation is, yeah, something's got to give. And then the Fed will start to cut rates, right? Well, now this unemployment rate is actually moving lower again, down to 3.8% versus the 3.9%. Another strong part of U.S. data in general, and has people pushing out expectations of those rate cuts from the Fed. And of course, this is a relatively good problem to have, right? I mean, unemployment rate is lower. U.S. data is doing so well, even at high interest rates, that the Fed isn't necessarily ready to cut rates. But a lot of people have expected that 5.5% overnight rate from the Fed to come lower here in 2024. And now we're a quarter of the way through the year, and the data has been so strong that they haven't cut quite yet. And this has led to Treasury yields also being higher than where they closed out 2023. You might remember the 10-year got under 4% at the end of last year and has steadily risen all the way up to right now, right around year-to-date highs of 4.4%. Now, this isn't the highest interest rate environment that we've been in the last 12 months. The 10-year got all the way up to close to 5%, but that was the highest 10-year yield that we've seen. I believe it was in more than a decade. Don't quote me on that, but it was at least multiple years. And so now climbing back to 4.4% on some continued strong U.S. data and the potential for Fed rate cuts to be pushed out further in time, this is a pretty strong interest rate environment. And you might think strong interest rate environment, well, that's got to be a weak gold price environment because gold doesn't bear interest. And if both these markets are flights to quality, I'm going to take the 4.4% with the U.S. Treasury note versus gold. No, not the case. Gold demand continues. It's unbelievable, this market, as it is not only blown out 2,200, now blowing out 2,300 comfortably in light of strong U.S. data and strong U.S. interest rates. As the correlation breakdown continues between those markets, gold's just on its own at this point. You can't really correlate it to anything, as it's been pretty much a straight shot higher the last 2 or so weeks, and we'll see where it concludes as this high employment data, high interest rate environment, unable to shake gold at all. And what was interesting, if you saw the trade intraday, gold moved lower off of the number. It was down, when I was checking, around $5-10 after Nonfarm came out, and there was this feeling of, okay, it's the end of the week. This employment data is so strong that the Fed might not cut rates at all in 2024. Finally, people are going to take some profits in gold. This market's going to move a little bit lower. Totally reverses that slightly bearish sentiment for just a little bit, and ends up being higher by, last time I checked, I mean, it might change by the time markets close on Friday afternoon, was higher by $20-30, getting back up above 2,300, now trading around 2,350. We'll see if they can get to 2,400 at this pace next week. But crazy price action here in gold. And like I say, not really correlated to anything, because you go on to US dollar and what's been going on in this market. And of course, the theoretical relationship is gold priced in US dollar. If US dollar is stronger, which it was after this non-firm, strong US data, strong US interest rates, strong US dollar, well, then gold prices should be weaker for that strong US dollar that they're priced in. Gold higher and US dollar seeing some strength. Now, US dollar did give away some of that strength throughout the day as gold moved on to newer highs. And part of that might be what I alluded to earlier, the fact that these numbers have been strong, but they continue to be revised down after the fact. But it could be gold pressed higher, and that pushed some bearish sentiment onto US dollar. Who knows? But either way, US dollar is still, from a broad perspective, pretty strong. I mean, you've got a euro market down around 108. You have a pound market that's been under 126 in recent trade. Right now, it's been trading a little bit higher than 126, but 125 has been the recent low for pound the last several months. And so not that far from lows there for pound, high for US dollar. And then also, of course, you have the dollar yen that's right around 151, 152, and those are 30-year highs in that market. But take a look at that dollar versus the franc. That market has crept up pretty high, and you might remember that the Swiss central bank recently cut interest rates, and so strong U.S. data, strong U.S. interest rates, pushing out those interest rate cuts has led to some pretty strong U.S. dollar price action versus the franc as well. But there you have it, another strong employment data out of the U.S., and it's not necessarily making sense when you look across all the different markets. Of course, the market is the market. It's the one true thing that does make sense, but in terms of your textbooks or your theories, having a strong U.S. interest rate, a strong U.S. dollar, and strong gold prices, we'll see if it can all last as more U.S. Data comes out for the remainder of April. Crazy price action so far.